Hi, my name is Mariam Hanif, and this is 5 things that every business owner needs to know. So number 1 is a limited company doesn't mean anything. If you are setting up a business, then the first thing you kind of think about is to set up that limited company. Now, as soon as you set up that limited company, your fiduciary duties start on that day. You need to start filing for that company, doing confirmation statements for that company. There's a lot of admin involved. And a lot of the times you might also need to get an accountant, which might be expensive. So it's best to sort of speak to somebody or weigh up your options as to a sole trader, partnership, or a limited company, which are the 3 main entities that you can start off as. And then slowly, you can actually convert those businesses into limited companies, which isn't an issue. A limited company is created for legal purposes, so it separates yourself from the business entirely. It's its own separate legal entity. And a limited company has different ways of filing its taxes. So that's also something important to note because, again, accountancy fees may be a bit more expensive this way. A limited company will not work if you do not work. You have to see this as an entrepreneur and you have to make this business work. Just by having a limited company does not mean that it will give you success. You have to actually run that business and be its entrepreneur and make the business work. And the first stance of business, you have to wear a lot of hats as well. According to Forbes, businesses don't actually make a profit in the first year. They tend to actually make a loss. It takes about 18 to 24 months for your business to actually come into a profit, which means that a lot of businesses fail. About 25% of businesses fail in the first year. So it is all to do with mentality and how strong you can actually make this business work. Number 2 is know your profit. Now you need to know your numbers and know your profit to make the business work. If you don't know your profitability rates, you don't know what you're marketing against and your competitors out there, then it is probably something that you really need to sit down and consider, because these are the backbone of the business, is the money, the cash flow, and how much profit you're actually making on each sale. If you are being reliant on an accountant or a finance assistant or somebody within the business who is not you, then you're doing something wrong. You should know the numbers better than anybody else. So at the start of business, it is important to wear some of those hats. So the marketing, the actual work, the finance hats, the organizing, the admin, there are so many things that you need to do at the beginning. If you know how to do those perfectly, you can then hand those hats over to somebody else and show them how to do it perfectly and how it works for your business. Because a lot of the employees that come from different businesses have different ideas, which is great to take on board if it is good for your business. But if you have been running it and you know exactly how it works for the business and it's making a profit, get them to do it your way. Numbers are the heartbeat of the business, so you need to come up with a realistic price tag for your items. Look at your competitors, look at your market, because you need to know where you stand within that and how you're going to differentiate yourself within the market and be successful. Number 3 is hire a bookkeeper or get an accountant or find a software. Now, this is really important. A lot of people just get all their receipts in a bin bag or in a box and give it to their accountant to do. Now, number 1, you're going to miss a lot of things, and HMRC love this because they're going to know that you do hard copy invoices and receipts, and that means that there is a lot of room for human error, which means that they are going to love to investigate you. And number 2 is an accountant will actually charge you more money to look at your receipts, or they're just not charging you enough, which means they are not doing their job properly. And that means that you're going to have to pay more money out front anyway. If you can't afford an accountant, which can be quite expensive when you're first starting off in business, then look to try and get a software in place or do the bookkeeping yourself. Try and get a software and do the bookkeeping yourself. It's really important that you stay on top of your books, your receipts, your invoices, anything that goes in and out of the bank. You know where every penny is going and you have a receipt for every penny that has gone out, so that if ever you have an investigation, HMRC know you've got your books in order and there is nothing for them to worry about, and not to delve into even more information because it's all digitally available on the software. And in the end, sometimes it actually works out cheaper than if you were to actually give an accountant your invoices and receipts and then have massive fines at the end of it. Hiring an accountant is always cheaper because in the long run, it will save you a lot of money, time, and tax. And number 2, if you're doing it yourself, you get an understanding of how you're doing it and the software, and understanding how the software works and pulling off the reports that you might want to pull off. So you can pull off a profit and loss report, cash flow report, supplier list, debtor list. There's all these things that you can pull off those reports, and that will just help you understand the business a little bit better as well. You should always have a separate bank account for business expenses. Anything personal, pay it through your personal account and then do an expense to the business. That way you're keeping everything separate, which is crucial because you don't want HMRC. They want to show that that is money that is personal to you and you're taking a dividend out or you're taking some money out of the business so that you can pay tax on it. They are wanting to see you put money into the business so that it might be a sale. So just keep it all separate and you don't need to worry about that. Number 4 is business credit. Now, a lot of businesses go into business and try and find a way of getting credit or a loan from somewhere to try and start up their business. Now, try not to do that. In the first instance, you are sort of strapped for cash. And if you're not actually making money, how are you going to be paying that money back? Figure out how to make money first. And once you've made that money, when you want to scale that business and do well with that business, then take a loan or a overdraft or whatever it might be to then try and scale your business, because you already know how to make that money. You're going to make more money and pay that loan back. If you're trying to get a loan before you've actually made any money, you're making a big mistake. Business credit will not save an unskilled entrepreneur. You need to know how to make that business, be an entrepreneur and make that business work by making a profit, and then look to get that credit and grow the business further. Number 5 is the final one, and it's probably the most important one, is reinvesting in your business. Now, if you have a lot of profit that you're making, which would be amazing, any profit that you are making is really tempting as a business owner to say, right, I'm going to start paying myself money. Let me recoup some of that cash that I put in initially, or all that hard work that I've been doing. Try not to do that. The best thing to do for your business to keep it afloat and keep it going for the long run is to have that long-term goal. Reinvesting that money back into the business means that your business is going to hopefully make more money, double or triple what you're currently getting in as a profit and wanting to take out. In 5-10 years time, when you have made that money grow and grow and grow, and you've got a stable income coming in, you can then start recouping some of that money back at that point, which will be worthwhile because it will be a long-term business and it will give you kind of like a passive income, which is kind of what you want to see as a business grows. So instead of taking that money out yourself, try and take that money out and reinvest it in staff, new equipment, new innovative ideas, research, whatever it is. Try and make that business work in whatever field you are, and hopefully it will be a big success. I hope this video has been helpful, and if you've got any comments, do link them down below. And if you've got any good business ideas for startups, then do put those in the comments so that other people can read those and benefit. Thank you. Bye bye.